Have you ever been in a situation whereby you're caught in between, should you go for the insurance way or should you go ahead and invest? For example, you get approached by these guys who are selling insurance policies and they're telling you, we sell insurance policies about education. See, they know very well. Maybe you have a kid and then they tell you, guess what? If you were to deposit this amount of money at this frequency in this period of time, then rest assured that everything to do with the education of your kid is covered, and then everything in terms of the education, all the way from the kindergarten up to finishing to tertiary, everything is covered. So, and then from that point now you ask yourself, okay, then that means that I have maybe, let's say I'm required maybe to deposit like 3,000 each and every month. I do so for the next like 12 years, and then this will mean like an X amount of money. Or should I go ahead and, instead of actually going and buying this insurance cover, should I go ahead and invest this amount of money? So what is the difference in terms of the returns and which one is better? This is a question that most times I usually get. And I know maybe one of the people who have been asking me to make this video, this is the best time for you, because I'm going to shed some light and I'm going to break some myths that you guys usually have when it comes to insurances and when it comes to what we call the investments. And which one do I prefer and which one is better? That's the question, all right? Because I'm sharing this information with you for free and charging you a dime just for free. The only one return or in terms of a favor I want from you is to just like this video. It doesn't cost you anything. Hit that like button and also subscribe to this channel, because this is type of the information that I always post each and every day. All right, let's get into the business. Now, here we have two things. We have the insurance and we have the investments. Let's see what deals with what. Let's talk about insurance. You see, on this side of the insurance talks about surety, talks about you're 100% sure, like, you know, you are bet, like, see, it's insurance. If let's say you have subscribed to NHIF, you know very well once you get to a hospital, you produce or you front that card of yours, then you're gonna check, they're gonna actually stand for your what? For your bill, or something of sorts. So when you argue from the insurance point of view, this is a point of view where you're viewing life from, hey, I don't want to make a mistake, I want to be 100% sure, I want to be assured that, hey, guess what, my future is okay. And that's why they talk about things to do with life insurance. Like they tell you, perhaps maybe let's say you get sick, they make sure that they stand for your bills. And maybe let's say you disappear, in terms of you die, then they're gonna cater for all the activities about. You see, we human beings, we love to play it safe. We love to be in a situation whereby, like, hey, everything is assured to us. You see, if today I come here and assure you, give me, or me and you, let's invest. We put this 100,000 here, we invest, we buy this thing, or we start this business, and we are 100% sure that we'll be getting at least 2,000 each and every day. You're likely to buy that. Why? There is something called surety has been sold to you in that specific time. Okay, that's what the insurance does. They play around with what we call, you have kids, you have to take care, hey, guess what, you have to do this. And like maybe you're insuring your car or something of some, that is a thing that you have to do it. You have no option, because that one is actually mandated by the government. But there's something, it's not really like a law in our country. For example, life insurance is all by your choice. Education insurance is all by your choice. It's not like you have to do it. It's not like you having a car, you must produce an insurance cover to prove that you have actually insured. All those kind, you get what I'm saying? Now, on the other hand, when you talk about investment, this is what we call, you're not sure about the thing, and in most cases here, this is not an investment. This is where people confuse. Insurance is not an investment. Please, 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 no matter how you want to twist it, no matter how you want to make it look like and what have you, it is not an investment. Treat insurance as insurance. I know they will come with some few and wonderful words telling you, insure this, do this, and then you're going to make some cash. And they try to just play with your words and what. But the fact remains, if it's an insurance, it's an insurance. It's nothing like in investments. If it's an investment, then why don't they do away with the name insurance and talk about investments? But the good thing is that this insurance company, most of them offers some things to do with the investments. Now, the point is this: when it comes to investment, these are things that we say they sort of have its own percentage of risk. You cannot assure somebody that 100% you're gonna make some cash out of this, and you can't be able to assure somebody, you know, in terms of like, hey, if you invest this amount of money, you're gonna get this area 100% sure. You can't really do that, all right? And human beings, we tend to incline to areas where we are sure about our lives, especially when you touch about my home and my kids and my health. Those are the three things that you find in most cases are likely to fall into. Now, these two things covers different things, and they covers different aspects of life. The question is this: which one is better between the two? One, it depends with your approach, depends with what you need or want as a human being at your own level, at an individual level. What do you want? What are you covering at? What are you looking at? Okay, the point is this money that you guys usually give these insurance companies, you be sending that 3K each and every time. Do you know what they do with that money? They invest. That's for a fact. They don't just take that money and keep it somewhere and just relax. If they tell you there's some insurance, they tell you they're gonna give you like 3% or 5%. Why are they getting that extra money on top of that what they have promised you? The fact remains, and this is, and I really hope you will understand, because there are some people who are so emotional to some things you cannot even think. Everything you feel. The fact remains, if you were all to think like you, this world would be a very funny place. So the fact remains, that amount of money that you give these insurance companies, they actually channel that money towards investment. They keep their money into they keep their money, or they invest their money into things like treasury bills, treasury bonds, things to do with like FDS, that fixed deposit or fixed income investments. They fix their money into like things to do with rates. They do their money into the likes of all those kind of areas, because if they were to argue or view life the way you do, surety 100% and what have you, they wouldn't really be making money. All right, it's like you telling me you show up with the money in a bank, you deposit that money, and then that money just stays there, and then you go back home. Where will they get the money to pay the police officers and what have you? So investments fulfills a different gap in your life. And I always ask myself, if I can be able to invest, for example, if today I decide, instead of buying the insurance, I invest into something like stocks or shares or money market fund, I'm going to get my 10% at the end of the year. Say maybe like 8 or 9%, give or take around that percentage, because of the tax and what have you. So if I'm assured, sort of like I'm gonna get my 9% from the money market fund, and this one is giving me 3%. Why don't I invest my money here and I focus on me educating my kids, if that's the thing that I'm aiming, using the dividends? Should I call it dividends, or should I call it the interest rate or something of sort? Or maybe I can decide, instead of getting the insurance way, why don't I get myself into the shares or the stocks? Or why don't I get two of them? I get into the shares and I get into the money market fund. Or why don't I get into the circles and I get into the stocks or something of sort? Because now you are investing. Remember one thing, this money that you are getting into the insurance, sometimes most of the policies of the insurance, they tell you, hey, this money is actually fixed and withdrawable, and if you have to withdraw this money is after 5 years, after 10 years or something of sort. But when it comes to an investment, this money, you can actually access it anytime you want. You can actually get your money, you can liquidate your shares, you can liquidate your stocks, whatever you call it, and then you can grab that opportunity that has actually showed up. Let's say maybe you've gotten your money, a substantive amount of money on the shares, on the insurance, and then you get an opportunity like immediately, and then that opportunity requires you to grab it within a month or 2 months. It means that probably that opportunity to elapse. Now, the point is this: whatever best for you depends with your personality. Depends with your what? Personality. And I've said, actually consider this that fits you. There's some people who actually have some sort of a certain risk appetite deep inside of them. Go the investments way. There's some people who don't love to play risky and all those kind of things. They just love to, you just assure me that everything is good on my future, my kids and what have you. These things about the stocks, the treasury bills, the treasury, I don't want to listen to those things. So if you're that kind of an individual, go the insurance way. If you're this kind of an individual who love numbers, who love to invest, just like me, I prefer going the investment way. All right, instead of him telling me like I should be depositing 3,000 in an insurance company for the next 12 years, and then maybe my kids will be educated, or maybe my life insurance, why don't I invest things in the real estate and what have you? I build myself, I secure myself. You see, let me tell you one secret. And I want you to listen very carefully what happens. The wealthy individual or the rich, those who understand the money, they never go the insurance way. They go investment way. They invest, then they insure their investments. You get what I'm saying? Now, what you're doing, you're not investing, you just go straight directly to the what? To the insurance way. You see, the wealthy people, they usually invest. Instead of me taking a whole couple of millions and ensure my life that I'm gonna be safe, why don't I take the same millions of money, build a flat, all right, and then insure that flat? Yeah, you see what I've just done that. Instead of me taking this money to an insurance company and they're gonna promise me, hey, we're gonna be taking care of you, your future is okay, your old age is okay, your pension is okay. No, they say no. Let me put my money where my mouth is. Let me pay you, the insurance company, to actually cover my property. That's what they do. So the point is this: I would prefer viewing it from the point of investment, then considering getting the insurance later. But if you're not that kind of an individual, you do not have that aspect or that appetite of risk and what have you, then consider staying on the insurance part. Otherwise, if you go the investment part, you might get discouraged at the end of the day. So the point is this: I'm not here to kind of force things down your throat and tell you, hey, don't go the insurance way. No, insurance are an amazing thing. Again, I think that's a disclaimer that I should give. It's an amazing way. But the point is this: ask yourself before you actually go and subscribe to that insurance policy. Ask yourself, okay, fine, what am I looking for? Okay, am I looking where I want to multiply my money, or am I looking to a point whereby, hey, I'm okay with my cash flow, I'm okay with whatever I'm doing, I already have existence in terms of the businesses, I'm already having a good cash flow, but hey, I just want to cover my insurance, I just want to cover my medical bills just in case, I want to cover my education or something of sort. You can go to that direction. Both of them are quite important, but they differ, depends on what you want at that particular point. It's like right now I ask you a very simple question. What is good between a car and a truck? What? You'll be like, what? Between a car and a truck? There's no way you can say a car is better than a truck. There's no way you can say a truck is better. You're gonna ask me now, it depends on what you want to do exactly. That now the best answer. What do you want? For example, personally as Joseph, I know myself very well. I'm a risk taker. I love trying things. I love being out there. I hate playing it safe and what have you. I just love, bracing or holding the horn, or rather the bull by its horn and what have you. So probably myself, you might, hear me inclining more towards the investment more than the insurance way, because that's me. All right. So it's you now to define yourself and understand, hey, guess what really fits me at this particular point, so that at least I can be able to know, hey, this is what works for me, this is what doesn't work for me, so that at that particular point you can be able to make an appropriate and right decision. That is exactly what we do in this life that we live on. Now, my guys, now this is my point as I finish this specific video. Investments, there are a variety of them that you can be able to do. Investment, there are a variety of them that you can pick and be able to go ahead and start. On the insurance as well, there are a variety of them. And it is quite funny. Some of these companies that offers the investment opportunities or the insurance opportunities, okay, or insurance policies or plans, they also have the investments. So it's you to pick. It's you to pick. Once you show up to that insurance company, always, whenever they show up to tell you, hey, we are selling insurance policies and what have you, ask them, do you offer also as well the investment opportunities? And this is what I would challenge you to do. How about you get both if you're in a capacity to do so? Maybe let's say you usually deposit like 5,000 on insurance. Why don't you do this? Consider if that company usually have the both insurance and the investments. Maybe you can decide to put the 3,000 or keep 3,000 on the insurance and 2,000 on the what? Investment. Some of these companies have insurance policies and they also have the money market fund. Why don't you put like 3,000? If you want to be a little bit safer, then you can put the 3,000 on the insurance and then 2,000 all the money market fund. That is exactly how you do it, rather than just putting all your money into the insurance. Rather than you get what I'm saying. So the issue here is being smart, knowing where your money is, and keeping or putting your mouth exactly at that particular point. Don't forget, my number is always on the description of this specific video. Grab it, let's have a conversation, because I know just like an iron sharpens another iron, so do we learn from each other. For now, it's a goodbye, but don't forget, comment down below, tell me what you think, like this video and subscribe, and also if you have capacity to be a member of this channel. For now, it's a goodbye and see you in the next one.